I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. Position disclosure, again, no changes here, but just been trading around these positions, and today was actually a great day to do that. Took some real advantage of this gap down here this morning. So let's go to the charts. SPY's closed up 0.5%. Q's closed up 0.7%. IWM closed down 0.5%, with the TLT being positive. Interest rates down a little bit. That tends to provide relative strength to the NASDAQ, and that's exactly what we had happen. Let's go to the daily charts here. Let's start with the SPY. So, the thing about today, a lot of people were nervous this morning. I really wasn't about this gap down. We gapped down big. I was surprised to see it. When I woke up this morning at, I don't know, 4:15 local time out here in Idaho, it was logged into my trading software within 15 minutes. Another benefit of not being in the office is I can get started pretty much right away. Coffee's brewing, log it in. I said, holy cow, we're really down over a percentage point on this gap. And then I was trying to figure out why, and I couldn't figure out why. It's the same reasons that have been out there, but there was no real updates on any of those reasons, right? China Evergrande, China real estate, that seems like it's improving. The debt ceiling thing is getting a little bit closer. Okay, fine. That doesn't really concern me too much. So I think that is going to get done. Uh, so I'm like trying to figure out why we're gapping down so much this morning, and I couldn't. Outside of the fact that the TLT had me nervous. So you guys remember from yesterday's afternoon meeting, I was nervous about where the TLT closed. The TLT closed beneath 143.75 yesterday, which is the lower band of support that this bearish pattern has created here for the TLT daily chart, and it's as the ADMA has caught up. So I think I said it in yesterday's morning meeting that the TLT is going to break down further. There's a good chance it starts doing it today because the ADMA caught up to the resistance of the bearish consolidation that TLT has been doing. So TLT broke down further yesterday, closed below support, and that was I was really impressed and almost a little bit surprised by just how strong the market was yesterday, particularly how strong the NASDAQ was yesterday, given what the TLT did and given what interest rates did. But I kind of chalked it up to some mean reversion. Qs had been somewhat oversold, a bunch of down days here in a row, and fine, they caught a snapback. So then when we gapped down this morning and I couldn't find any other reason for it, I was like, well, maybe the market's finally reacting to what the TLT did yesterday, because sometimes the efficient market hypothesis I remember learning about in college is just the biggest bunch of BS ever, because I see the market have delayed reactions to things all the time. So it would not have been overly surprising to me to see, okay, TLT sold off and closed below support yesterday, and TLT pre-market at one point was also even negative today. That the market's having a delayed reaction, some fears coming in, and they're gapping down huge. That was the only thing I could really point it to. But then the ADP number came out at 8:15, the jobs number, and TLT rallied all the way back to green on it. We can take a look at that pre-market price action that came in there. This move right here in this TLT. So interest rates are down, TLT's green. I'm like, okay, well now the only real reason I had in my brain on why this market could actually be gapping down this big is gone. And we know, with where we are with the market, that the S&P is neutral to bearish. The NASDAQ is bearish unless it can get it back above 362.50. That's when it become neutral again, and the IWM is neutral. So okay, fine. A little bit of a delayed reaction to yesterday's TLT move, and we're in a market that is bearish anyway. So it's not surprising to see SPYs and Qs are down this morning, but it was the degree of the gap was just huge. Over a percentage point. When I bought VXX, when I shorted VXX pre-marketed like 27.80, I think it was 27.80. It stays high. 28.28. Where did I short that thing pre-market today? Yeah, in here. Yeah, 27.80. That's right. when I shorted the VXX up there pre-market, it was really just a bet on the gap down on this market being too big. And at a very minimum, I thought we would see some sort of oversold bounce to correct the short time frame downside extension, and that is exactly what we got. Right, so we got this initial bounce here, and keep in mind, there's a lot of volatility right now, and October, from a seasonality perspective, is known for being a volatile month. So we got this big move higher here this morning, back into the ADMA. That's where the pivot high came in. And look, you guys know, if you guys have been part of the team for a while, you guys know that I really kind of tell it like it is. I am not the type of trader to lie and say that things are going well when they're not. I'm not the type of trader to, I got no problem telling people when I lose money. No problem at all. I got no problem telling people when I'm wrong. I just felt like my small time frame technicals today like could not have been better. Basically bought the pre-market low by shorting VXX and buying a couple of stocks. We called the pivot high here in the market perfectly as the ADMA was catching up, that this little consolidation was going to break down. When opening lows broke, and the SPY was approaching 427.50. We talked about buying versus the pre-market low, which was 427. That turned out to then be the absolute bottom of the day. We worked our way back up to the ADMA. At this time here at 10:10, I said it'd be great to see, now that we bounce back to the ADMA again, if we could have an inside 5-minute bar, because the inside 5-minute bar will then give us clarity on which way it breaks. So guess what? We snap back to this ADMA. The next candle was an inside bar, and the thought process there was, as if this inside bar breaks to the downside, that could lead to a breaking of lows, and we're going to continue a downtrend. You want to get then out of the way on your longs, because that pre-market low of 427 is probably going to break, and then we are going to be really weak, and we're not as extended on the small time frames to the downside anymore. Or if that inside bar is able to break to the upside, then it's kind of showing us that we're in the clear. We're going to get a 15-minute correction, and we can potentially work our way higher. And once again, that was exactly what happened. We broke this inside 5 to the upside. We gave a 15-minute correction. You can see it here on the 15-minute chart. Snap back to the ADMA on the 15. Broke highs by a little bit. NASDAQ at this point we had identified as being the relatively strong index. NASDAQ went green here, broke that opening high. Then you had your usual midday kind of chop, right? 10:30 to 1 and change or so. You kind of had your just midday chop going on. Same thing with the SPYs. And then some news hit on the debt ceiling. I think Jamie Dimon came out today and he said that the U.S. government should get rid of the debt ceiling entirely. McConnell, I think, said that he's going to work to at least have a short-term solution, right? Because they always got to play the political games. So he's going to be open-minded to working towards at least a short-term solution. And the market loved it, and it ripped even further. And that's kind of what I expected from the debt ceiling stuff to begin with. I know that the debt ceiling can be a big deal, and I know that there was a time, I believe, under the Obama administration, correct me if I'm wrong on that, where we actually did have a little bit of a shutdown. I remember I have a buddy who worked in the FBI, and all of a sudden he wasn't able to get paid for a period of time, because obviously he works for the FBI, works for the government. He wasn't able to get paid because the government was kind of in shutdown mode. But I've seen this debt ceiling thing happen so many times over the course of the last 10 years, and I've never really seen it have a big negative impact on the market in the long run. And eventually they always seem to get this passed to be able to keep things functioning, for the exact same reasons why we were talking about earlier in the VTF. The number one motivation of a politician, and this is what we always want to think about, right? One of my big themes in trading is incentives. Incentives are actually what create technicals and charts, right? It's the incentive of every participant in the marketplace to make money. So if you understand that incentive, and you understand what the price action is doing and how people are positioned, you know what they're most likely going to do in the future. The number one incentive of an analyst is not to give you research that's going to make you money. It is to be right? So if the stock's going up, we see the upgrades come in. If the stock's going down, we see the downgrades come in. The number one incentive of a hedge fund manager is not to make a lot of money. That's their secondary incentive. The number one incentive of a hedge fund manager is to maintain and increase assets under management. That's why we see things like window dressing. Well, guess what? The number one incentive of a politician, and I don't want to get into politics, Democrat, Republican, whatever. I only like to talk about politics insofar as how it affects the market. Um, the number one incentive of politicians is not to do what's right for the American people. I'm sorry. That's their secondary incentive. The number one incentive of politicians is to stay in power to get reelected. And when it comes to something like the debt ceiling, this is why they, all the differences between all the politicians that are out there and Democrats and Republicans and whatever else, if it if a recession were to hit the US economy because our government is such a disaster that they can't even get something as simple as increasing the debt ceiling done, then all these politicians are going to risk losing their jobs, and they're not going to risk doing that. So it didn't surprise me at all when we saw that news come out kind of at 120 or so today, and then the market ripped higher. Spies went positive, Qs went positive, and it just turned into a really strong day, and it turned into a great day. I think for the team because I mean we called this stuff out pretty perfectly. If you look at the daily chart of the market, though, literally nothing has changed since yesterday's afternoon meeting. It's all like there's no like new Tech 36s where the S&P will go back from bearish back to neutral if they can clear that level. The Qs with their relative strength closed also right at the ADMA and right at resistance. The Qs really need to get above the space between 360 and 362.50. That's exactly what we talked about yesterday in order for the Qs to go from bearish to neutral. And the IWM is still in its consolidation. Attempted to have a little bit of a breakdown today, tailed right back up. It's still neutral. It's still in its consolidation, and there's nothing to report. I would say that given the way the market was bought up today, though, that even though there's no major change in the technicals, that it does make things perhaps slightly more bullish. But I don't want to get excited until and unless the market can start clearing its kind of key upside levels. So that's the big picture here for the market. For me, I was having some tech issues this morning. I was getting very aggravated, very frustrated. But even with that, the pre-market trades I was putting on paid me pretty well. This VXX continues to be the gift that keeps on giving. Every day I'm coming in, I'm shorting this, I'm trading it actively to the short side, and it's just been making me very consistent money. VXX and SoFi for 2 days in a row were my best names of the day today. SoFi, same thing. We talked about a buy versus $15.75 early on today. I know Felipe, I think, traded even better than I did. Every single time pre-market and during the day today that this thing was snapping back through 16, he was buying stock and making money. I really took all my buys in the beginning of the day here through 16, got that snap on the gap fill, did not reload that second time, and then, was at a big enough of a position as it continued to work its way higher. So those were kind of my trades of the day today. It was really a day I think to be focused on the market as a whole. You didn't necessarily have to be focused on the stocks that were in play today just because of the way that we gapped. It had the market, it had things that were correlated to the market. All of it was in play. There were a lot of different vessels that you could have used to trade the market today, whether it was the SPYs, Qs, T triple Q directly. I know some of you guys did well with the T triple Q today. That had good relative strength, or trading some of these stocks directly. Again, it was just a really solid trading day for the team. And that's really all I got for you guys today. So I am happy to take a look at whatever you guys want to chat about and whatever questions that you guys have. Scrolling back up here into the VTF. I'm going to go back to about 4:10 Eastern. Okay, from Jerry here is the first thing I'm seeing. Please talk about your game plans, levels that you trade when scalping VXX. Are you using the daily highs? And then just put in Rectober. So look, and I'm also seeing just a follow up question here in the VTF that got posted from YouTube from Ibaditis about shorting the Vix. So I'll just make a couple of points about it because I spoke a little bit about it in I think yesterday's afternoon meeting. I'm not saying you guys I'm just blindly shorting the VXX here without having risk management. You got to have risk management in place. And shorting the VXX is a little bit different than shorting the VIX itself. But like I think I just said in a meeting a day or two ago, the VXX is a terrible product to be long unless you're going to see a really fast market sell off in a really short period of time, a la what we saw in March 2020 when coronavirus happened. VXX does have the ability to go up hundreds of percentage points in very short periods of time. And it did that back here February, March 2020, right? Ripped from $53 to a high of $315 over the course of a really short period of time. Has the ability to do that. So you absolutely 100% have to be managing risk when you're doing this. And I see questions kind of pop up. If you at me, the question is going to pop up into my screen. It looks like someone just asked me what the difference is between the VIX and the VXX. I'll tell you, the VXX is just a faulty product because it's subject to time decay, which was eloquently explained by one of you guys into the VTF yesterday when we spoke about it. This thing has had to have so many reverse splits over time. It is inherently designed to go down over time, which again, it doesn't mean that there's not risk. There is risk to being short the VXX. Maybe some people remember. Let me see if I can find it. Oh man, I can't even find it anymore. There was a few years ago, there was that XIV product, which was another VIX product. And from so many people that were short it, they exploded, and it put like literally entire companies out of business. So you got to be very careful. But look at the time decay over that this thing was $350 million in 2009. And again, reverse split has just worked its way down over time. And what I spoke about yesterday as well is look at the SPYs versus the VXX. Just look at the September 20th pullback in the SPYs, which correlated to a spike in the VXX. On September 20th, the VXX popped to 32.41 because the SPYs had that big gap down day on the Evergrande crisis and went down to 428.86. Since then, the S&P and the NASDAQ have both broken their September 20th highs. And unfortunately, I don't have the actual VIX product available in the chart on this software right now because I stopped paying for the data on it. But you'll see even the VIX has been able to hold up at elevated prices better than VXX as well. If the VXX was a good product, 2 days ago when the S&P, when the SPYs closed weak and closed significantly below the September 20th close, the VXX should be like at $40, but it's not because this thing is inherently designed to only go down over time. So I love shorting this product because if the market goes sideways, this is going to go down. If the market goes up, this is going to go down. If the market goes down, this thing might even go down. It depends on the speed in which the market declines, right? But if you have a very sharp, fast sell-off, then yes, that's where your risk comes into play. This VXX can destroy you because it can go up hundreds of percentage points at a time. So you still have to have risk management in place. You have to have a game plan in place. So I know we've had pretty consistent resistance into this 28 to 28.50 area recently, which once again, today's high is 28.28, so it held that 28 zone once again. I know that this last spike high, I'm paying attention to that also, is 32.41. And at this point, this thing has paid me so well. I could hold this thing against me to 40 and probably still be profitable in it because I've just been consistently making money in it literally every day for like a month. It's just a garbage product. It is kind of one of the reasons why I like trading it. I also like the price and the way it moves and liquidity because I can take a lot of size. Took a lot of size in this VXX pre-market at 27.80. And again, I was concerned. And by the way, one of the reasons why we were able to pick out that the spies were going to give this pivot high is because the VXX was not confirming the move higher in the market properly. The VX the spies were acting stronger than the VXX was acting weak, and that was a concern to me, and I was kind of calling that out when we identified this pivot point here at highs. So yeah, so that's kind of the answer to your question, Jerry. I with the way that I'm trading this, I kind of have multiple stop losses, and my game plans on trades I take can sometimes get fairly complex. So I'm using that 2850 area. I'm using this absolute high here also from the recent pivot there as this VXX has kind of continued to trend down, and I'm kind of monitoring the positions and I'm lightening up in certain areas. I'm getting heavier in certain areas. And again, I thought that today's gap down for the market was just a layup for the market to move higher and for the VXX to move lower. So that was really the idea behind the trade there. So I hope that helps. Brian asking if there's news in Twitter. Stefan saying there's news in MGI. Is it moving up? Because that would get me excited. Ooh. This hurts. The compliance department told me I'm not allowed to trade when I'm actually conducting these afternoon meetings because I kind of want to jump in and take off some of this MGI right now, but I can't do it. Um, they're doing a partnership with Stellar. Interesting. MGI. Cool. So we also answered IB Adidas's 17's question. Twitter shares are trading higher after the company announced it entered into a definitive agreement to sell MoPub to AppLovin for $1 billion in cash. Was it 2019? I forget exactly which year the shutdown was, Brent. I thought it was in the Obama administration. It could have been under the Trump administration. I do know that eventually the market the market was fine with it, and eventually they took care of that though. Next year I'm seeing from Christian a question about Ford. Question about Ford. You went long this morning at 9:32. So I liked Ford and GM. I liked GM better today, but they didn't really give me the signal to kind of get involved in them, and I kind of took them off my radar pretty quickly. So you're saying you bought Ford at 9:32. I just want to also take a look at GM here real quick as well. Wow, I wonder what caused this spike. Yeah, GM tried to be strong here at the open, and I think that both GM and Ford have decent looking daily charts, but Ford below 14 is no good. But it opened up above 14. I think Ford's kind of done now with today's candle. It might need a little bit more time because it closed beneath 14. But anyway, you bought it off the open, 14.22 versus $14. Fine. Should you have gotten entered earlier? You got in pretty early, 9:32. If I had done that, you would have gotten your one-to-one kick. I don't know, honestly. If you had a game plan to go long versus 14, you could have just bought it the second the market opened. But I don't think that your purchase there is bad. I think you had a good trade, you had a good idea, you had a good support level, you have a daily chart here that looks better. I would argue that the market was even a little bit on your side here off the open. You went for your trade, and your trade just didn't fail, and it didn't quite give you. I mean, it did fail, but it didn't quite give you enough of a move to be able to cover your risk. So it's just kind of unfortunate, but I really don't think you did a bad job there. So you have a follow up to your question. In general, when trading versus pre-market lows, should I enter as soon as the market opens, as long as I see volume? Yeah, it's a little bit difficult to answer that question with one general answer because I do think it depends a little bit upon the situation. But if you have a big picture game plan where you want to be long versus pre-market lows or long versus a daily support level or something like that, you can buy it right away. And sometimes that will give you better pricing and sometimes it'll give you worse pricing. The flip side is if you're waiting for confirmation from volume and price action, meaning you want to see that heavy volume coming in as the stock is trading higher, what that will tend to mean is that you're going to have a higher probability of success but a worse risk reward. So a higher probability of success does not mean 100% probability of success. So it looks like you waited a little bit initially off the open, you saw the right things. So that actually means that you have a higher probability of success, even though I know it failed. But it also meant that you had a little bit of a worse price. So a worse price means a little bit of a worse risk reward. It also means it's a little bit more difficult to get your risk covered. So on the one hand, you could have bought as you did because then you thought you had the confirmation coming in. Your timing and your price is still not bad. You're buying at 9:32 a.m. Um, so on the one hand, you could do that and have just a little bit of a worse price, or you could be buying it off the open, never see the confirmation, and it just goes straight down and stops you out. Is the flip side of it. So it's a little bit of a trade off, and I really don't have a perfect answer for you on this. I think it is definitely dependent upon the situation, and I think that with this forward trade today, you could have done either. You could have just bought this thing the second the market opened versus $14, or you could have waited for a little bit more, confirmation from the price action, which is what you did. And you didn't wait. You don't want to wait too long either, though. And then you start chasing. Like, if you told me you bought at 9:37, I'd be like, okay, well, you definitely waited too long. And sometimes we see traders, they want to be in the stock, and the market opens, and it's like big green bar, big green bar, big green bar, and then they buy. That's no good most of the time, unless there's a real news event that's occurring or something like that. You're chasing price. You're too late. So to me, it sounds like your execution was pretty spot on. You waited long enough to be able to get some confirmation from price action. You didn't wait too long where you were chasing. I really think that you did nothing wrong here, Christian. Just not every trade's going to work out. Next here from a man, Steven. Coin. No problem. Coin off daily rejection at 250. If you were to see a gap up, would it be wise to go long off of that level? So the first thing that I would say here is that I am biased against this company, just so that you're aware. I've spoken about this one in the past. I don't think that just because let's say you're bullish on crypto, I don't think that's a reason to buy Coinbase. I think that crypto can be successful and Coinbase can still be a failure. Coinbase is a brokerage. Maybe they have some underlying crypto assets. I really don't know. But they're a brokerage and they charge commissions that are absurd. I have a Coinbase account. I own some crypto. I don't actively trade crypto, but I do a little dollar cost averaging. I got some exposure. And what do they charge? It's like they charge a percentage of the assets that you're purchasing, and it's like 2% or something like that. You tell me I gotta be 4% in the money on my buy of Ethereum just to be break even. There's no way that that's going to last over time. Eventually, assuming that crypto is successful, you'll see crypto brokerages have a race to the bottom in the exact same way that you saw equity brokerages have a race to the bottom as far as costs go. And then you got these, free brokerages now that sell their orders out to HFT firms for profit. I'm sure that these companies will start doing the same thing if they're not already doing it. So that'd be the first thing I would say about it. I'm like super bearish on Coinbase as a company. It doesn't mean it can't go higher. And for myself, I haven't traded it since the day of the IPO. I shorted it the day of the IPO. I shorted $400. I covered like 325 or 330 or something like that. Made $75 in intraday. Thought I had this great trade and made this great money, and then within like a month it was down at $210. So that would be my first thought process to you on it. Just want to let you know my thesis. As far as technicals go, I would not advocate buying this on a gap up tomorrow because you're buying a day 3. Stock just went from 230 to 250 in 2 trading sessions. It gaps up to 255 tomorrow. It's just a poor risk reward, poor probability of success. As of today's close, this thing is extended to the upside. Did have good volume today though. That's definitely notable. It's bullish, but it's too extended to the upside, I think, to buy in this area now. Stock's trading at 250 with the ADMA at 237.60 or so. You're looking at a $200 stock that's extended by about $13-14. At this point, I would want Coinbase to reset up on its daily chart. The most bullish thing I think that Coin could do that could give you a strong execution would be is if it spent a couple of days going sideways, let these moving averages cross, let them catch up a little bit, and then you can look for some sort of bullish continuation trade out of it. Next here from Mike. Any thoughts on the Twitter wedge? This is another company I was long for a long time. but no longer have a position in. I haven't really liked Twitter's performance since the last earnings report that it had. I forget exactly which day that was. It might have been here, July 23rd or so. I remember like day trading it off the open that day, and it just did not trade well. I don't know what the news is here. Oh, I do know. I do know what the news is. I just read it out loud. They just sold one of their businesses. That's probably a good thing. I'll tell you that the best thing that could make Twitter go up would be if Jack Dorsey quit. The guy is an awful CEO for this company because he's too focused on Square. Um, but yeah, I don't really have too much of an opinion on the technicals of Twitter right now. It's just kind of built out in a pretty big consolidation. Obviously, it's having good strength here after hours, but it's just bringing it right back to the midpoint of that consolidation. So this thing will start looking more bullish if it can clear back above 6750. And you definitely want to see it continue to hold above this 5750 area. And we definitely want to see Jack Dorsey out as CEO of Twitter. Um, yeah, Mike. So let the price action come to you. Zahor asked the difference between Vxx and Vix, so I think I went over that one already. Yeah, I think it was under the Obama administration that we shut down. I I added to my MGI position at these lows recently as well, but that's a bigger picture swing trade. Scrolling through. Robert loves it. UNFI. Is that what you mean, Jerry? Yeah, this UNFI has been this earnings report was stellar. I know Stefan's also loved this company for a while. They had a fantastic report back here. And I remember calling this out in the morning meeting that day saying I wanted to buy this thing through 40. And I got distracted and I didn't pull the trigger and I missed the trade. It was a phenomenal trade. Now it's put out a descending bull flag here into the ADMA with an inside day today. I like this UNFI for tomorrow for sure. But let's remember to bring this one up again in the morning meeting. Cool. Anybody else have any questions? I can't see the YouTube, so I don't know if there's any other questions that are in the YouTube. If they are, I think you could post it. That'd be great. Otherwise, I will wrap things up. We can do a shorter one today than usual, which is fine by me. Technically, I'm on vacation tomorrow. I'm probably still going to be hanging around, but it should be Patrick who's doing the meetings, the morning meeting and the afternoon meeting tomorrow, and the morning meeting on Friday. We do not do an afternoon meeting on Fridays. Again, I was hoping to do some cool stuff over the course of the next couple of days, but now with this impending thunderstorm, oh, they're in the image. I gotta see if I can open that. Oh, I see you posted a bunch of images. Let me scroll up here a little bit. It's hard for me to see these images on the app. That just looks like a cat. Oh, here we go from Sebastian. Yesterday you bought. Thank you. I got the one up from. Oh yeah, this ANY was a call out from 2 days ago originally when we saw the volume come in here for the team, and I think you asked me about this yesterday. So you bought it yesterday at 611 with the idea of getting out at 7. Okay, if it gave a nice move, so I could cover my risk and make some money. You got stopped out of the rest at 609 today and went to 7. So you bought it yesterday at 611. I don't know what time. And you got stopped out today? I got stopped out of the rest at 609. And today it went to, oh, you got stopped out yesterday at 609? All right, well, then you were keeping it tight. It would have been difficult. So it stinks. It broke opening lows yesterday. If this was my trade and I was in yesterday, I would have gotten stopped out also, would be the first thing I would tell you. Because I would have used the opening low as my stop out. I would have gotten stopped out here and I would have missed this move. And if that's what you did, if you got stopped out in this pullback, this thing never should have been able to break its opening low. You have this great volume that came in. It's a short squeeze candidate. It never should have been able to break this opening low. If you got stopped out at these lows and then it worked today, it just is what it is. It's really unfortunate. We had actually called this out on the desk 2 days ago when this volume was first coming in, and you could still have it from there. But if you bought this thing at any time yesterday, in the beginning of the day, I think it would be irresponsible to actually still be in it at this point. Because if you held through this, it'd mean that you're not managing risk. And if you're not managing risk, that's a key to failure, right? Um, okay. Got it, got it. YouTuber wants to know price action on AMD. Sure. And again, for people who are on YouTube, I apologize. I'm out here in Wyoming just for the week, so I'm trading off of a laptop. So my technology, usually when I'm trading remotely, I got 3 big wide screens, and when I'm in the office, I have 6 screens. So it's not a problem for me to see and jug multiple things. AMD held support. AMD had a great day today. AMD $100 is a support area, really 99.80. It was brought up in the morning meeting today. You could be long over 100. You could be short on a break of 100. The market rallied really well today. This thing was relatively strong. I think it looks good. It really needs to get back above 107.50. You need to clear this negative Maribozu, and I think then it starts looking really good again. But this is a great day one. If you have stock from today, then you want to hold that stock through for tomorrow. And honestly, it's looking at charts like AMD, even though I know that the SPYs are still kind of in bearish territory, but it's looking at charts like AMD that make me think that the SPYs and the Qs could be breaking higher and be getting back into that neutral territory soon. But we'll see. October's a volatile month. Question regarding trailing stop loss. Do you think it was too tight? So it goes back to Sebastian's question. I think getting stopped at 609 was a little bit tight, and it'd be difficult for me to see it without even actually like kind of looking at your computer specifically. Um, I don't know exactly where you entered. Maybe you got stopped out on like you were using this as a trail. You're probably, if I had to guess, you were using this as a trail. You bought up the open, you got stopped out here. In which case, I'm actually fine with that. I'm totally fine with that. And you could have tightened it up even further. You could have used this low as an out if you were long off the open in ANY yesterday. Yeah, AMD looks good. Cool. We spoke about that one. No problem on the VXX thought process. Which strategy do you consider with more edge? Buying breakouts or buying pullbacks? I think it depends on the market environment, Robert, because different market environments, different strategies are going to be better than others. The breakout buy for momentum trading has always been a solid one for years and years and years now. Buying pullbacks definitely depends on the market environment that you're dealing with. If you're in a more bearish market environment, like we've honestly seen recently, buying pullbacks is definitely more dangerous. You got to be more selective with it. If you're in a bull market, like we had for most of the rest of the year, every one of those pullbacks was buyable very quickly. But as the market environment has changed now here in September and we've gotten a little bit more bearish, you got to look at a lot more things, right? You got to be looking at those sentiment indicators that we talk about in the morning meeting that Pat posts. You got to be looking at your degrees of extension. Like one of the worst things you can do is think that you're buying a dip in a bearish market when there's no downside extension. You really need to have the downside extension, the volume confirmation. So yeah, that's kind of the thought process there. It's definitely market environment dependent. Just noticed you're using a 7. I use an 8 and 21. This might have changed itself today. That should be an 8 and 21. Boom and boom. Sorry about that. And yeah, so I accidentally scrolled over my moving averages earlier and touched my mouse, which moved them. I use an 8 and 21 and a 200. Yeah, so that's just a little keystroke error. When I log out of my software, it'll be fine tomorrow. Do I think engulfing candlesticks are stronger candlestick patterns than hammers or shooting stars? Also is going to be situation dependent. They're totally different. They represent totally different things. So those strong Maribozu candlesticks like an AMD today, especially if there's volume confirmation on it, are very powerful candles. And you'll find that very often when I'm assessing important upside areas or downside areas that a market needs to recapture, it's oftentimes going to be based off of higher volume Marubozu bars. So when we're looking at AMD, the one thing I don't like about AMD's candle today is I don't like that it's not on more volume. This candle here was on a little bit more higher volume on September 28th. So this is a negative Marubozu on higher volume. So what does that candle mean? It means that there's a lot of sellers, right? Especially when you have the volume confirmation. Sellers are in control all day. So if the market can ever get back above this high, if it can ever get back above 107.50 for AMD, what does that mean? It means that every single person who sold on this day who was long was wrong. So they are no longer sitting on the offer to book profit, and if anything, they might be coming back to chase price. Anyone who sold short on this day, who still has the position, is now losing money. So what do? They buy back the stock. So if you can reclaim a negative Marubozu in this instance, that oftentimes can lead to technically higher price action much easier for the supply and demand reasons that I just outlined to you. So they are important candles, and it's always, whether it's this or hammers or whatever, the volume confirmation is always very key. Without the volume, it's not as important. Like today was a good Marubozu here for AMD. I like it, but the volume's not there. And again, this is why volume is important. Someone asked me this morning when we were gapping down big, Derrick, do you think that you're going to see panic sellers this morning? And I said, I don't think so. And that's because I don't think a lot of people bought yesterday. I think some shorts that were weak-handed maybe got squeezed out. But look at the volume. There's no one really trapped off of yesterday's candle to create panic selling based off of today's gap. So, that's volume importance, right? And that's also why this candle is so important for the SPYs, and this candle is so important for the SPYs, for the bulls to get back above those. And look at the volume on this one here, where we have a high of 436.77. Again, that's why I keep pointing out this 436 number. It's created resistance, and if you start clearing that, clearing 436.77, anyone who sold on this higher volume candle, well, guess what? They were wrong. It's a negative Marubozu. Sellers are in control all the time. So the answer to your question, I think this was a YouTube question for Fabio, but it's a little difficult for me to tell. The answer to your question is what's more powerful? Marubozus or hammers or shooting stars, they're all powerful. It's based on the information that's around it. That's one of the reasons why trading is difficult. Trading is difficult because it's extremely dynamic, right? It's not as simple as just memorizing what one candlestick looks like or one candlestick pattern looks like and think that you can be a successful trader. It's about assessing the specifics of that information based on all of the other information, all of the other surrounding information that's actually out there at the same time. And only with all of that can you actually kind of make those determinations to potentially create profit for yourself. So I hope that helps for you, Fabio. I actually don't know the answer to your question there, Mike. All right, gang, I'm going to wrap things up. Great day today. Again, assuming that Pat can get on the VTF tomorrow. I don't know what's been going on at the office. He should be the one who's doing the meetings. I'll probably be around for definitely at least the Open, even though I technically took tomorrow off. I'll be trading the Open. I like to, my vacation days, I like to just actually be more of a participant in the virtual trading floor and reap the benefits of it than actually, having to do all the meetings. So I give myself a little bit of a break there. But I'm usually still lurking around and listening to everything that you guys say because of how great of a team that we have here. So, for people who are at home just watching on YouTube or whatever, you can reach out to learn about becoming part of that team. You can become a subscriber. You can become a trader yourself on a professional basis with T3. So feel free to reach out. I will see everybody soon. Assume that you won't see me until Monday, and maybe you guys will be surprised. Have a great night, everybody. I'll see you all next time.